Let's take a look at the oil market amid rising uncertainty over China's economy. Here with the latest look is you're looking at WTI crude oil and Brent crude, both down on the day. West Texas Intermediate down a little over 1%. But we have Ines Ferre with a bigger breakdown. Take us through it, Ines.
Yeah, Diane, and part of this really has to do with the recovery in China and the nonlinear recovery, really, as it has been, or a whimper of a recovery, as some would say it has been so far. China has taken some stimulus measures. It has cut some key lending rates recently. And so that is to shore up their economy. And some experts are saying perhaps that is not enough to shore up their economy. But this has really been sort of a disappointment for the oil markets, which were sort of banking on China to be able to recover, roar back from its lockdowns, COVID lockdowns last year. You have exports and imports in China that have fallen, factory activity that shrank. And so you are seeing pressure on oil over the last weeks. And despite, in fact, also output cuts from OPEC Plus. Remember that in early April, OPEC Plus announced a surprise output cut. Then Saudi Arabia earlier this month had announced that it would be doing it alone and also cutting some production. Nevertheless, you have seen oil year to date. I'm going to show you a chart here for Brent crude, for example. This was in early April with that surprise cut. Well, it has fallen since then. So these cuts that OPEC Plus have done have sort of tried to put a floor on the oil market, but they haven't been necessarily that effective. And this is because of concerns of demand going forward. You also have Russian oil that has seeped into the market as well. That has put prices lower as well. So nevertheless, demand, that is what going forward is concerning these oil markets. And you're seeing it also in oil-related stocks. I'm going to pull up the XLE that Shauna was mentioning earlier. XLE, the worst performer today. Year to date, it is also the worst performer, down about 10% year to date. And remember, this is a reversal of what we saw last year, where XLE was the outperformer, the best performer. And you can see tech and communication services this year taking the lead, guys.